What are unsecured credit cards? Unsecured credit cards are also called traditional credit cards. Most consumer credit cards are unsecured, which means you don't need to provide collateral in order to get one. If you don't qualify for an unsecured credit card, you can usually get a secured credit card. Here's the difference between secured and unsecured credit cards. The main distinction is that secured cards require a deposit as collateral. Unsecured credit cards are riskier for creditors, so they're typically harder to get. Your credit history is crucial for unsecured cards because it shows how likely you are to pay back what you borrow. But secured cards can build that positive payment history if you use the card and make timely payments every month. This is how unsecured credit cards work. When you're approved for an unsecured credit card, you're given a credit limit and a list of terms and conditions, including your interest rate and annual fee. You can charge purchases to the card up to your credit limit. However, using less than 30% of your available credit will help boost your credit score. Your purchases are applied to your balance. Then, you need to make payments of at least the minimum due before your due date. So what are the interest rates for unsecured credit cards? Credit card interest rates are typically variable, which means they can change with overall economic conditions. These interest rates have risen significantly over time, but the higher your credit score, the lower your personal interest rate will typically be. Here's how to apply for an unsecured credit card. Many credit cards have reward structures that appeal to consumers with specific interests and spending habits. So the first step is to research cards that fit your interests, buying patterns, and credit score. Next, it's a good idea to see if you pre-qualify before applying for any unsecured credit card. That allows you to estimate your chances of approval without triggering a hard inquiry on your credit report. If you find a card you like and you pre-qualify for it, you can usually submit an application online. Of course, you'll find both benefits and disadvantages of unsecured credit cards. On the pro side, you can make purchases now and pay them off later. You don't need to pay a security deposit before opening an account. Different credit cards offer rewards and benefits to align with individual needs and interests, and unsecured credit cards may offer higher credit limits and lower interest rates than secured credit cards. On the con side, applying for the card is a hard pull on your credit report. You may not qualify for a higher credit limit and lower interest rates if you don't have a solid credit history. It's easy to rack up debt if you don't systematically pay it down. And if you miss a payment or pay late, you may be charged late fees and see a negative line item on your credit report. So then, what are the alternatives to unsecured credit cards? When you need to pay with plastic, you typically have 4 options. Secured credit cards are just like unsecured cards, but they require a deposit to secure the credit line. Debit cards look like credit cards, but they're linked to a bank account for funding. Prepaid cards are like debit cards that you load with money in advance. Gift cards are similar to prepaid cards, but often can't be reloaded. So, when you use the full gift amount, they're done. Here's the bottom line on unsecured credit cards. If you don't have an unsecured credit card, it might seem like the holy grail of financial products. But they come with pros and cons, so before getting one, it's important to consider whether it's the right move for you.